It was tough for the bulls last week. The S&P 500 was down almost 4% for the week. So not all is lost for the bulls at this point. The good thing for them is that we're coming into the week sitting right on the bottom of that trend channel, right on support. And so we'll see if they can hold. As far as momentum goes, 12-month momentum is still positive. It could finish negative for this week. It's pretty close to finishing negative, but with only a few days left, I doubt that we'll get there. So what that means is we're still bullish overall in the long term until that relationship changes, that 12-month momentum changes. So large caps are still stronger than small caps, and growth is still stronger than value. So let's look at a chart, a weekly chart of the S&P 500, and get a little bit more granular on the price action. And here's a chart of the S&P 500. So I've got three things labeled here, but 1 and 2 are pretty much the same thing. It's the bottom of the trading range that we've been in since the beginning, or the middle part of 2018. Go back a little bit further towards the end of 17, depending on how you look at it. But nonetheless, we're at the bottom of the trading range. It held the trend line for last week. If you look at it, you can see how the bulls came in and they bought price right around the trend line. Didn't get much below it, and then they sucked price back up. So don't know if the bulls will come in and hold it here, but this would be a logical place for them to do so. We're still in the first leg of the pullback. This is a pretty steep pullback, a pretty strong pullback. I suspect that we will see, at least if a rally, another leg to the downside. Don't know if that leg to the downside will break the trend line and go down even further, but we do suspect that a leg will get an up leg and then another down leg here in the relatively near future, the weeks to come. So let's run over the positions real quick and then get into the operating plan for this week. So first things first, a couple of our U.S. sectors we were stopped out of, transportation and U.S. aerospace and defense. They just hit their stop prices and we got out. Only had a half position in those two, and so overall, not a bad thing. We got stopped out where we did. Still holding on to healthcare, and we are still holding on to our technology positions there. So, and then of course, large cap, and then the growth as well. So the large cap and the growth, those are more of our 12-month momentum plays, and then the other ones that I just mentioned, those are our weekly swing plays. Now, when we look at natural gas is down for the week. Bad week for natural gas, right there on support, and so we'll see if it can hold. If it does in fact break below last week's low, then we'll get stopped out of that one. And then the last position, which is the US dollar, good week for the dollar, up a little bit for the week, broke out to a new high, or relatively new high, so happy with that. But overall, right now, the market doesn't look super bullish. I mean, we had this bad week and really bad few weeks rather in the market. Good thing we're down bottom of the trading range. Things are still on support. They're just on a lower level of support. So we don't have any new positions that we're looking at adding this week. We're pretty close to some stops, and so we're going to really watch those closely and then wait for the market to strengthen up a little bit before we get our toes back in the water. So with that, have a great week, and we'll talk to you next time.